What's going on, everybody? It's Jeff here. Welcome back to the channel. A little bit of a red day in the market overall today as we are about to close. I do want to cover the first two big banks that have reported their second quarter earnings. We're also going to talk about what investors are seeing as a future outlook for the rest of the year, especially now that some of the easy money policy and the Fed assistance is ending now that the coronavirus is slowly starting to come to a little bit of a close. We are also going to cover something very ironic that I see happening with AMC. I want to give you what my take is on it, guys. So stick around. Let's get into it. First off, guys, big banks earnings raise doubts over what's next. JP Morgan and Goldman Sachs both posted awesome numbers, better than expected. However, if you see highlighted at the bottom right here, guys, the main problem with the bank's performance is that the trends that helped them survive and thrive during the pandemic are slowly ending, and there's no clear indication of what the next driver of earnings will be. I'm going to talk about this as a whole, guys. I want to also correlate to what I've been talking to you guys about when it comes to the increasingly amount of money on margin. If you see here, the S&P and the margin debt really kind of flow together. What is ironic is if you look at the past two recessions, the dot-com bubble and the Great Recession happening starting in 2007, the margin debt has decreased as well as the S&P. However, in this kind of recession, which was a little bit of the bear market was much shorter, it really reached all-time highs. As you can see here, guys, once the S&P begins to sell off, margin debt will need to be able to come down. That's what really causes that catastrophic accelerated decline. Just as you see right here, as margin helps accelerate the incline, it also will help accelerate the decline. I do want to correlate this again for you guys as it is continuing the cryptocurrency market sell-off. There was a lot of speculation going on that some large institutions were slowly starting to pull away their positions in crypto because it did not count in order to provide solid liquidity that certain of the prime brokers had required. Okay, next thing I want to talk about is this article right here. JP Morgan warns hedge funds to expect intraday margin calls. This is from an article written by a URL risk.net from a woman named Nell McKenzie. I actually went over to her Twitter and tried to scroll through a little bit about just to see if I could see how kind of valid of a writer she is. It only takes a little bit of time for you guys to do some due diligence on your own and to really make sure you don't just take everything with a grain of salt, but you do a little bit of research behind it just to see. So this article that talks about JP Morgan and their intraday margin calls, I couldn't find any other articles on the internet to corroborate this, and it doesn't look like it's coming from a huge media outlet, even though we know that the media does spread a little bit of FUD. What I do want to tell you guys is this: chances are, okay, some of these hedge funds have already been receiving margin calls throughout the process. If you guys have been following me for a long period of time, you probably remember that when my brokerage, Merrill Lynch, I told you guys, when they had adjusted their margin requirements for holding AMC stock, I actually had a margin call, okay? It was for a very small percentage of the amount I had on margin was a very small percentage compared to my overall account. And on top of it, the amount I got margin called was only for 25% of the total amount I had on margin, okay? And I also had shared with you guys, I have numerous Bank of America accounts where I literally just made a simple transfer from one account to my Merrill Lynch, brokerage account in order to maintain that margin requirement. I didn't have to sell off any of my positions. So I do believe that has been happening all along, especially as we've seen some crazy spikes in June. However, here's when things get different. When the market eventually starts to cool off, when investors start to see, okay, we have literally squeezed everything we could, okay, from this market, literally running almost 100% from the lows, okay, in March of 2020 when the coronavirus was in full, when it just first came out and the shutdowns were in full effect immediately happening. It's literally ran almost 100% from that. Once investors start to shift over, bond rates are going to rise because naturally the Fed is going to stop buying these assets, okay? and there's going to be a little of a shift. That's when the margin it starts to accelerate. And it's the same thing that would happen, for example, if I still had things on margin, okay, and all of a sudden my Tesla, my Apple, my Home Depot, which I have fairly large positions in, begin to really accelerate and sell off, but I'm still holding a volatile stock such as AMC, that's when the margin calls are going to happen again, and I'm not going to have enough liquidity in my other positions to be able to just sell a little bit, shift around some money, and so forth. If we look at where the crypto has been, and some of these speculations are accurate, which I do believe to a certain percentage they are, we just don't know what kind of percentage they are, then this literally, ATM for them to be able to tap for liquidity has completely run dry. Okay, so keep that in mind. The other thing, and this is the last thing I am going to talk about, guys, are a couple screenshots. If you've been in this for a while and you remember the $50 mark, guys, remember when all of these comments were coming out, being posted on my videos, on numerous other YouTubers' videos, talking about the $50. Once AMC hits $50, I'm out. I think it's going to squeeze to $50. There's a couple things I know when it comes to YouTube after been creating content for just this year, guys, but I've been creating, over almost 200 videos now, is when you see comments that literally come 5 minutes, 7 minutes, 11 minutes, sometimes you even see them quicker. And a lot of them, some of them gets flagged under spam, but chances are this is a very similar individual or a group of individuals that are literally jumping on in order to be able to get something, in order for it to be able to move people that read these comments. I'm not even going to or talk about the price or the fact that they're talking about $100 price point to squeeze for the $100 price point. The even funnier thing that I'm seeing right here is, hello, my fellow apes. Do not use Fidelity, use Robinhood, Webull, Cash App, or E-Trade. First of all, it's not even like this guy is suggesting one thing that he's using. He's literally trying to get individuals to continue to use the payment for order flow to be routed through. That's pretty ironic. Here's another screenshot from another video that talks even further about the $100 price point, is literally boosting on another YouTuber, adding to that $100 price point. So if you remember, guys, back when the $50 price point was absolutely rampant, okay, I'm going to switch over to the 90-day chart, guys. We were in here. They were talking about the $50 price point. It got up to the $14 mark. We finally broke through that $14 mark. It was hanging around the $20 mark for a very short period of time before we absolutely ripped up. So just keep that in the back of your mind. It's kind of nice to see those things coming out. I'm going to switch over to a couple different things here, guys. One, we are going to look at a long time frame. This is the 1-day chart. We're still hanging tight to that $39 level of support, guys. Unfortunately, beneath that, the next strong level of support is that $29 range. If you jump over to the if you jump over here to the 4-hour chart, it is the same thing. We are still hanging on to that same strong $39 level of support, and 29 eventually goes back over to it. Let me give you the last little bit of news. When you jump over to the weekly chart, guys, we are still seeing a little bit of a golden cross from that 50 moving average, and now you are starting to see right here, I can zoom in a little bit closer for you guys, you're starting to see that 100 moving average cross the 200 moving average, which is known as a golden cross, which is another bullish sentiment. Okay, so just want to give you guys an update for the rest of the day. I hope you enjoy it, and I'll see you in the next one.